Good morning, everyone.
Good morning.
Okay, so we may have a few folks rolling in, but so I'm going to record this session and then I'll make it available on the YouTube channel, so you can go back and replay it at your leisure. So let me okay. So today what we're going to do is actually before we start, anyone here for the first time? You are just going to say hi in the chat box if you want to. Or, welcome. So how this works is what we'll do is we'll go through kind of a theme, and today's theme is young guns for the most part, and we'll get into that. Also want to take a quick pass through of some of the leading stocks of the year. So let's take a look at that. And then by the time we're done, maybe if there's time, we'll also take a look at maybe some of the strongest stocks out there over a longer term. So that'll be 3 sections. And I also want to include, as part of this discussion, maybe we'll kick off with that, is any stocks that you think are like young guns or recent IPOs. If you want to put the ticker in the chat box, then we can bring those up and take a look as well. So that's kind of what we'll do. In most of it, we'll just work off the charts. So I'm going to share my screen. Okay, so you should be seeing my screen. Okay, so let's so while we're kind of getting set up, so if you have stocks that are like, for example, ARM is a recent IPO, that'd be a good one, and that's on the list anyway to review. But stocks like ARM and etc. If you have those, if you want to put those into the meeting chat, then we'll pick those up, and if they're not already covered, we will take a look at them. Okay, so I'm going to start by reviewing the list from the sensor group. So not in any particular order, it just happens to be that ARM is at the top of the list. So this is a recent IPO. So this is the company that NVIDIA tried to buy, but they were prevented by the Europeans from citing monopoly concerns and competitiveness. It's actually interesting. A large part of this stock is actually owned by SoFi Bank, so they really control the float, and only a part of the float is tradable. It came out a little hot, but then sold off. And here we see it's made a first kind of a classic IPO base, already broke through this week out of that. Although you could have picked it up here as well at 64. So this one is worth paying attention to because a lot of their chips are in a lot of the products that are very popular. So this is from out of Cambridge in the UK. Okay, so you can see that this one actually just broke out this week. So this one is worth following. In fact, let me go back to Armor because I think they just posted. So on the part of the issue with young stocks is that you don't have a lot of financial information, especially early on. And if for those of you who are familiar with like Cancer, Bill O'Neill, in his book, he kind of tells the reader that you want to demand at least 3 years of financial track record, and out of those 3 years, which is roughly 12 quarters, right? You want to have at least 6 quarters where they're showing phenomenal growth, and typically that's where you're looking for your triple-digit gainers in earnings and sales. So that kind of clues you into which ones you want to home in on. And although we're not going to cover the financial criteria so much here today, but I do want to point that out. That's what you're really going to home in on. And we'll take a look at a few big winners later. So ARM is the first one. The next one up is Pinterest. Pinterest is based out of San Francisco, discovery engine, blah, blah, blah. So I think most of you are familiar with the social media stock. So it hasn't done much of late. And all of these are within 5 years. And you can see they're still negative in net income. So this one needs to turn the tide. Roblox, recent IPO. So it had a little bit of a run early on, and then it's sold off, big sell off. Now it's kind of bottoming out here. So one to pay attention to as this kind of starts to build the right side, starts to move along, move up. However, net income is still negative. On a lot of these ones at this early stage, what's going to be driving them is sales. So that's what you have to pay attention to a little bit more. Is if they don't have rising sales, forget it. And then the second thing you want to look at is net income. So you want to see it before you take any of these on. One trick is at least take the most recent quarter should be positive. That tells you stock's on a path to profitability. And in this case, neither is the case. So as a trade is fine, but if you're thinking of kind of a long-term building a position, a multi-year position, then at this stage it's a bit premature. Okay, Dynatrace. So this one we can see it's actually built a base. So this is in position A technically, and Dynatrace is positive. So here's a better looking for stock with financials, and you can see this is what I pointed to earlier about triple-digit growth on earnings. So Dynatrace has that. On a stock with this kind of growth, you want to see higher sales growth. And we do have 1 year revenue, which is 24. So it's right borderline. That's a minimally accepted level. So that's fine. But so this one might be worth looking into a little bit more deeper. Next up is LegalZoom. So this was IPO'd, and now we can see a lot of these IPOs have this pattern. They come out, make a quick splash, then they kind of go off into the wilderness like this one. And here we see a bottoming action, change of trend, and it's building out its first base. So LegalZoom is positive, triple-digit gains, but this is the issue. Sales is anemic. For a young company, certainly at this level, the percentage numbers should be spectacular because that's what you're looking for. You're looking for an explosion in growth, not something that's going to tick along at 5, 8, 10% like here. So this is good. So but this is all dependent on what happens in sales. Okay, ASML is not really so much a young company. Yeah. So look at that one. JXN. So we see here's the IPO comes out, has its move 50%, then starts to base, fails, tries again. They kind of got double top action here, fails again. Now you kind of got a triple top, which is testing. So if it holds and moves on up, this is making the move technically. However, as we can see, you've got, that's interesting, negative sales growth. So the stock's got a lot of work ahead of itself. And one of the things that you absolutely want to be doing with these companies, right, is you want to follow the financials. because that's where the growth is going to be telling before the stock really starts to move. And so here, like if you're interested in this one, for example, you have enough time and you have, all this time to start checking out the financials and seeing what is the growth prospect for this company, and is there something, do they have something that's going to do something disruptive, change something, and do I want to be in it as early as I can afford to be. So Udemy, so here's a fairly popular product servicing offering. They provide training courses for people in technology, also business courses. So you just kind of buy the course between $10 and $100 or whatever they're selling it at, and then you have content providers that are teaching you. The courses are pretty good, but the stock still early on is kind of finding its feet, and a lot of times you want to see the highs taken out before the stock's really saying it's set up. And if you're a lot more risk averse, then you can start to take a look at further in the or lower in the technical chart. But again, Udemy still a profitable, and on a quarter report basis, they're still negative. Sales growth 17%. So not quite the explosion that you're looking for. Um, but you don't want to you don't want to disregard these stocks, because at some point they will turn for the most part, but you just don't know when. So if you take your eye off the ball, you can miss it. So it's worthwhile keeping a ongoing watch list of these. So for example, here we have Intab. So positive sales is 372. Again, they're negative. They do have operating positive cash flow. On a quarterly basis, they're still negative, but their earnings isn't, the momentum isn't strong enough yet. But their sales is moving. So this one, the sales is leading, and then hopefully the margins will come in, and then the EPS will come in, and the share price will move. So that's kind of the sequence of how it works. All right, let's go on. SMRT, Smartsheet. Again, this is in the IT tool to help people manage their work. So this one's negative, and it's a cash burner. So the cash is negative as well. So if they're negative both on income and cash, I mean that's just a kind of a stock you don't want to touch. It's just like treat it like it's got leprosy. It needs to because management's not doing a good job, basically. And anybody that came at the IPO is now down almost, pretty close to 70%. It's no surprise, right? He's some of this what he told you. EVCM. So this one's still negative, finding its way, and we can see the growth just isn't there. So it doesn't take that long to just run down these. And obviously, I'm explaining some of these, right? That's why it's taking a bit more time, but so you can have your markers, right? And you can even put a scan on these to say, just for now, only show me the ones with annual growth of say 20%, earnings, something say more than 25%. Which will save you some time. Like this one wouldn't pass the scan at all. It's all negative. So let's just rip a little bit faster through the rest of these. TXG, so it's negative. Snowflake. Well, this one had a big hoopla when it came out. Very infamous CEO did something somewhere else, came here, takes I mean, his salary gave it away. I mean, the guy's putting in like $1 million, whatever it is, per month salary, which is more than they're bringing in. So this is, so you can see with a lot of these, right, so let's look at this for a second. When everybody wants to trade IPOs because, the theory is, oh, got to get in and it's going to be the next big thing. But a lot of them kind of flame out very quickly if they do anything at all. And then they go through this kind of long period, as we can see, of being in the woodshed, and then until they finally come out. And when they start to finally come out, a couple of things are happening. One, their numbers are starting to improve. And then two, we can see the demand starts to pick up. Right. So you can see here, there was some buying started here. And again here, then we've got a little uptick in volume starting to occur, which coincides with this rise up. So you can see this momentum coming into the stock, and this accumulation now starting to occur. So when it hits a trigger like this, so that makes that pivot enticing, because now you've all the ingredients in the cake to look at this as a potential buy. Also the relative strength. So this one, Duolingo, is actually one of the strongest ones so far. AI, Fastly, and a lot of these we can see that the financials are just weak, but that's to be expected. Datadog. So Datadog is still negative, but here's one. Okay, so this one posted a positive quarter, so they're on the trajectory to turn around the financials, which is good. Triple-digit gains, earnings momentum, and they've got annual sales of 31%, which is good. So this one's got the beginnings of what you want to see. Now the financials should be turning, and then we can see the relative strength is starting to pick up. We had this long sell-off, bottoming action here, trend reversal, and you've got a consolidation, a couple of pans here. There's double bottom and a cup breakout. So it's breaking out of this pan here. So that's stock that's on the move. Base. Coinbase. So that, there was a lot of hoopla around Coinbase because of the whole crypto stuff, but we still see supporting negative. Fortunately, they do have a good cash flow. Earnings is starting to show promising, getting up close to that triple-digit stuff, but their sales isn't there. So if the sales are the growth in sales is declining, which is a concern at this stage. So definitely want to see a turnaround there, maybe next quarter. And technically, you can see stocks just sold off. Bottoms, trend reversal, little base in here, and actually there's a breakout right there. Relative strength is not superb, so not the best setup, but something that this could easily turn around at some point, and chances are stock will be trading at a higher price by the time the numbers and everything line up. So keep that in mind when we look at a couple of stocks from history, because the argument's going to be, why would I want to buy this at, say, 265 when I can buy it now? Well, if you buy it now, hey, there's no promise it'll get to 265. It could meander for a while. And then B, remember, your objective is to buy the point where the stock's about to make a move. So if this is the trigger point, where you have the highest probability of the stock making a move, that's where you want to step in, because between here and here, may happen, may not happen. Between here, between this pivot and this pivot, so there was an opportunity potentially here, and then in here it's extended. So next opportunity would be here. And if you're not in this, then obviously next opportunity is here. So Middle East, global, again, negative. And this was on the IBD list for a while, Unity. And you can see, yeah, it's been a rough ride, downtrend. Still I'm kind of meandering, trying to put a bottom in here. And financially, it's negative. So even the last quarter is negative. Sales growth, they have 2 billion in sales. So they do have sales, and that's the first trigger we want to see. So as this improves, then you look to margins, and as their margins improve, then you look to earnings. So this one has potential. Okay, so that's this is just not a full list. This is a short list, but there's 39 stocks in that list. So let's have a look at some of the ones in the chat. Almond Dual we covered. I think some of these we covered. FTEI. Yes, stock sporting a nice uptrend. Rental and leasing services. So here you have a stock with triple-digit sales, triple-digit earnings. Gross margins that have to be compared to the industry, but anything below 50% is a little anemic. When did they IPO? Okay, not too long ago. So this one's getting out there a little bit. So again, you can see this was underwater for quite a while. Had a little bit of a run. Trend change. Okay, let's look at UPST. Just want to focus in on the younger companies. When did they IPO? Okay, that's good. So UPST, we can see, and then still the negative. So this is a cash burner. Negative income, negative cash flow. They're only bringing in 500 million a year in sales. They're reporting losses, operating losses of income of 253. They're burning up cash at 269. So that means they've probably got to go to the debt markets, or they're going to have to issue more shares. Yeah, they have a lot of debt. So I would not touch this. I mean, this is the recipe for disaster as it stands. FRM. So this is recent. Yep. So again, we had the big sell-off. So there was a lot of hoopla about this because the reports were Amazon's going to do a buy now, pay later, whatever it was. With this, they had a contract with this company, and so there was a hoopla when it first came out. We can see again just the process of how these IPOs work, where there's just a period of time where they get clobbered, and now this one seems to have bottomed. It's trying to move up numbers wise. They're still negative, 1.7 billion sales. Cash wise, 59 million. So they're not generating enough cash at this stage to sustain them. So unless they start to move the needle somewhere in their operations, they could run into trouble. So the quality, the financial quality is just not strong enough. So I'm not going to look at triple ETFs. If you're interested in stuff like that, then you should be part of the Sunday group. Health is long term. Uber's been around a little longer now. Okay, so they've been around. Okay, still been 5 years. That's good. So Uber, which we all know about, has now turned positive. Margins are 40%. Like to see that higher. So they've got the triple digit earnings, but this sales growth isn't quite there. So when you have a big difference in between sales growth and earnings growth, you can have that anomaly at for short periods, but that's definitely not sustainable. So either the earnings growth is going to come down to match sales, which is the more likely scenario, because chances of them exploding the sales, they would have to enter new markets and stuff like that. So you'd have to be on top of the business case with them. But definitely this one, numbers wise, looks better. Chart wise, stocks bottomed, trend change. And we can see here there was a breakout a few weeks ago, which is now up 26%. So if you got that breakout, you probably be thinking about some profit taking. Docu Rec. Okay, so this move here was potential acquisition, but again, DocuSign, so they are positive. That's good. They now have triple digits in their earnings, but the sales, you see, the sales numbers just not there. So there's a discrepancy. So that discrepancy would have kept you out of DocuSign. And depending on where you bought this, out of this. But here we see the stock is putting in bottoming action. But now that it's, so this move is totally, I don't know if it's gone through, but there's a bid on this stock. So that's kind of, I'm done for now. Crowd. Okay, so nice down move, V-shape bottomed, trend change, consolidation, the fast move up. So there was an opportunity on the pivot. So where you see these boxes, the stock's being reviewed Sunday night. And here you see the handle, high handle drawn. And so people in the Sunday would have gotten in at 166.63, and from there 261. So it's gone up $100 from there, which is about uh, about 50, around a 50% move. So so those opportunities are still there, right? In terms of picking up good stocks. So look, end phase. So this one is solar. So look at the monthly. So they've been out a little bit longer. All right, so this is kind of an alternative energy story. Um, nice run from 17. It's in a pullback, well, more than a pullback. It's in a correction right now, but it looks like that is starting to bottom here around the 125. In fact, um, $90, which you may or may not be able to see here, at $90, that was the buy. Um, so Canslip's not the only game in town, right? There are other ways to buy into these stocks, especially long-term potential growth stocks like this. And for end phase, that level was $90 based on fundamentals, margin of safety, and a few other things. So there was, and if you had picked this up at 90, you're now at 125, you're up 35. So that's 1/3. So it's about what, 30% increase. Plug plugs in a downtrend, negative, and this is the cash burner. So I would not touch this at all. Monday. Okay, so this one we can see it's kind of going through its kind of on the underwater stage. It's underwater right now. Numbers wise, it's negative in earnings, negative on the quarter. Um, so it's got triple digit earnings growth showing up, and now you've got pretty good sales numbers coming in. So this one can be looked at in terms of its as it unfolds, especially as you start to get uh, an uptick and pickup in volume. And if they report a positive quarter, then that's the trigger. What was the last quarter? Which they already have. Diluted earnings was 15 cents. The last quarter was 15 cents. So they're on a trajectory to profitability now. So I would put this close to hand. CRM is not young. And these are all weekly charts. Okay, so that's some of these other stocks are a little bit longer. Okay, so we've covered a watch list or selected some, well, it's not really selected, just a short list of stocks from the sensor watch list for young guns. Went through participant stocks on young guns and IPOs. So let's have a take a look at um, so I'm gonna go to monthly chart. That's quarterly. It's monthly. I came back to the monthly. So I'd go switch over to monthly back there. Um, go weekly chart on Monday. All right, so I was on the wrong time frame. But here you see trend change, consolidation comes out. And challenging the pivot right there. All right, back to the monthly. So let's look at how Google first, since everyone's familiar with Google. So when Google came out, so Google, and this is justice because the splits now, right? So in today's term, it would have been around equivalent of $2. But so when Google came out, so they came romping out of the gate, out of their IPO. And so even if you thought you'd missed this, it then goes on to make a consolidation. And it's not just a small consolidation. So you can see this is during the financial crash. And it doesn't really come out of that until about, yeah, which is at 19. And from there, Google is currently sitting up about 600+% run over that time period. And in between, obviously, there's opportunities to get in. But the point here is that with these IPOs, you have time to figure them out, right? And like even with Google, if you missed it when it first came out, and it would have been on your radar because of the upward trajectory. But then at some point, it does correct, and in fact, you got a massive cup and handle, a bit too deep, though. Yeah, you wouldn't count that. From the lows, trend change. There's a pivot right there as well, which could have been taken as an entry. And to the peak, it would have been about over 700% there. So let's take a Home Depot. So Home Depot, we go to Home Depot. So with Home Depot, it comes out, doesn't do anything, kind of just drifts off for a couple of years, and then finally gets to about 87. So you have this little pullback here, breakout pivot there, and then it starts to make it move this little. That's the 87 crash there. And then with Home Depot, you can see all of the splits that it's had along the way. So this is a classic sign of a major growth stock where it's got this enormous growth and the stock just keeps splitting and splitting and splitting. And that's how you end up with a ton of stock. Hasn't done a lot lately. And then you can also see, right, so from about to the 2000 top here, it was underwater for a long time. And it wasn't until it got to 2013. So it was 13 years, it did nothing. And then finally gets to here. And now from there, it's made a big move. Stock's doubled. So this is slightly slower grower, but these are the ones that if you can catch these are the ones that you can sit with, like Livermore says. Let's just go take a look at Microsoft for a second. So again, Microsoft, another example, right? Look at this stock. Split. How many splits it had through its major run here. And Microsoft didn't kind of bolt out of the gate. There were, you had at least 8 months to look at Microsoft, see if you wanted to get in. And then you got in. And there was a lot of N around Microsoft, right? The PC, the internet. But again, when Microsoft topped out, the tech top, it sat out for a long time until things changed. So this one also sat out for about 14 years. So had you bought here, you would have been underwater for 14 years. And had you stayed in your position, if you had a big position, then your money would have been dead at that stage until you picked up 14 years later. That's 14 years. That's a long time. So your portfolio would have had a little challenge. But once Microsoft came back out, look what happened. So now let's take a look at now. Service now has got some of the hallmarks of being a big leader. Comes out. So this one actually did bolt out a little bit. And then this on the monthly, right? So you see it comes in. There's probably an opportunity around here. So you could ride that first. Your money's more than doubled through that period basis. And now we see it's starting to hit all-time highs. So this is the other area, right? If you look at, especially like cancer, they talk about the N factor, and one of those N's is all-time highs, not just 52-week highs. So a stock like this, which has got a tremendous trajectory, can be used to build positions over a long term. I mean, you can build a core position and trade around it, and what that's how these should be done. But if you had done that with, say, Microsoft back in 2013, so we're looking at the 54 area. So 54 gets back to all-time highs. That was actually a little later. But once the stock, so these are, work with like super growth stocks. From there, even though 54 is you could have gone earlier, yeah, but from here, you're up 500%. And look at this run. And that's just that's the trend. That's the run that you want to capture. Something like this, multi-year, so you don't have to pay the capital gains taxes, sleep at night, and you're doubling, tripling, quintupling your money along the way. So these kind of stocks we look review on Saturday nights and build portfolios around long-term stocks. Okay, so we covered IPOs, young companies. We covered group picks. We covered kind of major growth stories. Gave an example of one that's now. Let's have a look at some of the big winning stocks of the year. So not in any particular order. I'm just going to bring a few of these up. SMCI. Change the chart. Okay. So SMCI had, so this was beneficiary of the artificial intelligence movement, but this was a stock that basically went up close to 400%. Then it came off. Now it's building this long consolidation. So a break above here would be SMCI back in play. So that was one. NVIDIA, everybody knows about, but let's have a look. So again, major beneficiary of change the major beneficiary of artificial intelligence. Stock made a big move. It's been meandering since then, so it's topped out around 505, around there 508. It's challenging that again, but so it all depends on which way this breaks. If it continues to break higher, once it breaks this consolidation area to the upside, then it's ready for the next move. But technically, it could still break down, but it's got momentum and support. So through this, it's just been in a trading range. But NVIDIA's been another massive winner this year, both from a theme. So the next one is Elf. Elf, which is beauty products. So this one, I mean, so here, it's not surprising Elf had this run. I mean, look at the sales numbers, right? 70% growth, triple digit earnings, sustained for 4 quarters. Last year's earnings growth was 240%, 70% margin, gross margins. That's what you want to see this well above 50, right? in which we have. So all of the ingredients for Elf are there financially. Sales 750, so it's not a big company, but 121 in income, 110 cash. So we would like to see cash a little bit higher. Shares outstanding, it's only 54 million, so that's there's not enough shares to go around. So if there's demand, then the price is going to explode. So this is a good stock for you to review because it's got all of the ingredients of what is the basis of CanSlim. And so low float, high demand, triple-digit sales growth, triple-digit earnings growth, uh, high profits, margin, what's the ROE, and debt? So hardly any debt, and the ROE is 27%. So here's a classic, right? So this would screen through any canceling criteria. And you had stocks doing nothing. Hits a 52-week high right there. And from there, it goes on to make about 270% run. And you had opportunities to build in this position along the way. So this is a good stock for you to study as well. Let's just have a look at a few more. Jabble. So Jabble had, I mean, this one broke out right at the beginning of the year. It's up 95% in the year already. So big move, and that was earnings, I think. So stocks effectively doubled. And here again, you see this stocks doing nothing last year, just meandering. And if you're on top of these, because so this just scanning alone won't get you there, right? You need to maintain a watch list and watch these because this would have told you, okay, it's trading sideways, and then as soon as it on your radar, here it dries up. So if you were reviewing this on a weekly basis, you got a classic dry up here, and then explodes. And that's your pivot. If you missed that, you would have caught it later. And here's the second ad. It's another entry. So you can value this 3 times. And so if you had done that, then you would have more than doubled your investment in this one. Let's look at one that's less cancelly fix, which I did a video on. So here you have a base explodes out of here. Another base, which gives you an add-on. So stocks up about close to 60%. We'll look at one more. BRT. Oh yeah, okay. So here you can see notes from Sunday night, early buy, standby, and up 108%, whatever. So 23. So this would be on your radar. It's in an uptrend. First base starts to come out. Pivots there. There's an early buy in the base here, standard buys here. And the stock is up 174%. So so you can see that this year was obviously wasn't so good at the beginning of the year. Then the year took off, but there were several stocks that gave you triple-digit gains in the year, and even in not so good years, we've shown those stocks are out there, and you can definitely pick up 50% and more just by being diligent in your work and then keeping an eye on these up and coming stocks. And and it kind of starts with the IPOs because that's where it starts, and then you just start to kind of keep a list of those, monitor them, watch them, grow with them, learn them, find out what the company does, get to know them financially, and then that's going to build your conviction. So when those opportunities come in some of those, not in all of them, but definitely in some of those, then that's where you can make some good money. Okay, so that's kind of the session. Is there? I'll open it up for discussion. Uh, yeah, as you can see, some of these are good explosions in earnings. So it's also good to track earnings um, on these because that's another indication of a stock about to make a move.
For MJ?
Hello? Yes.
Yeah, I have a question. So primarily you're looking at the financials and the earnings and revenues when you're looking at these IPO type bases.
Yeah. I start with the financials because you want to. I mean, ultimately, that's what it's going to drive the price at the end of the day. So it's the financials. It's also, is it in a industry sector that's got a future promise, right? So whether that's parts of tech, all of tech, whether that's like alternative energy. So is there like a paradigm shift that's in the air? Is there a trend change? Is there some kind of disruption that's going to occur? And then within that, which companies uh, have got products and services that are being offered into that space? And then from there, it's like, okay, which of these companies are the strongest? We have the best balance sheet, best growth, best business plan, and some of those qualitative um, studies can only come from engaging with with the company. It's 10Ks, it's earnings. So earnings is critical.
Okay, and then also you're looking at sector and industry group to find out which are leaders. So like comparing ARM to say NVIDIA or NVIDIA to AMD.
Yeah. So if I go back to ARM over here, I can see who else is in the same category and who's doing better than the industry. So in this IX247, that's the industry group, which is semiconductors. So I can see that the stocks above it are performing better, as well as Lattice and the Broadcom and NXPI. So I can take a look at those, but these are more established, whereas ARM is obviously just coming into the market. Um, so ARM is at the bottom because it doesn't have the numbers yet. It's a nice new IPO, but so monolithic power, for example, in this broadly in the same area, which is a high quality stock. CRUS, NXPI is another good one. But MX is not so good. So here, you can, I can just take that and I can just quickly take a look to see what the competition looks like, and if there's a better stock to take a look at. But you always want to be because one of the financial evaluations that comes back to comparing margins, right? Um, so with margins, you want to see in the stock that you want to buy, their margins need to be better than the competition. Because if there's ever a price war, then the company with the best margins survive it.
Yeah, that makes total sense. Yeah.
Yeah.
Now, another thing I noticed was, again, going back to the ARM thing, I started looking up who the holders were. And
Hmm.
as you mentioned that SoftBank still owns like 90% of it. So then
Right.
I looked at the other institutions that have it, and some of the names that were Fidelity, Goldman Sachs, Fidelity Contra Fund. So some of those names that we're familiar with for that, but they own, you know, less than 10% of the available
Right.
stock.
Yeah, that's good and bad because at some point they'll want to pay out. So that s- will bring supply to the markets
Yeah,
and then dilute um, your current price. It's kind of the opposite to the buybacks. Um, so buybacks take supply off the market, and
yeah,
then this will add supplies, which means that the earnings will go down on a per share basis. And if that goes down, then then the stock price will take a hit.
yeah. And looking at the price that Nvidia wanted to purchase, they wanted to buy them for 40 billion. And now the market cap is like 72 billion based on the current price. So it's much higher than that initial offer from
Mm,
Nvidia.
yeah, but
Just looking at those
66,
numbers,
yeah, billion.
yeah. So I see a lot of froth in it, right? Based on a valuation thing. Yet the IPO base is there and it's moving.
Yeah, no, I mean, again,
Technically, yeah,
this stage, so this is definitely a stock of interest. So, once it makes a pattern like this, then your first thought process is around trading it, right? It's like, how do I trade this?
yeah,
Uh, but you also want to have a long-term view on some of these because it's like, as we saw Microsoft and Home Depot and Google and some of these others, some of these will eventually be the next Google or Microsoft. So if or even how or even Apple, Qualcomm, and so if you're engaging with them early on, you'll get a feel for the stock, and you'll get a feel for the trading of how that stock is behaving.
yeah,
So that'll give you a lot of insights into the charts and what to watch for, what to look out for, and it just makes you a better trader all round. But unfortunately, a lot of people don't want to look at the financials, um, you know, for whatever reason. But if there's a secret source, it's there,
yeah, yeah. Yeah, basically the chart patterns will start revealing,
right?
giving that, as you call it,
Hmm.
feel. And so for instance, like Monday, which you brought up, when you went over that, yeah, it made a compelling point that the numbers are better behind that sort of
Hmm.
story.
Yeah, so I do know, like on this one,
It just recently had earnings positive,
right? Yeah,
15%.
so they're not quite there yet, but
Right.
uh,
And
if you
again,
look at a
get a,
competitor to Monday, let's have a look, see if
yeah.
Teams in listed in here.
Did you bring up Team at least?
I was just seeing if it's listed in this one as competitor.
Okay.
There were a lot of competitors not seeing team in there. Let's see if it shows up. Well, it's crowded over spaces, overcrowded. DocuSign's in there. Interesting. I would have thought team would have shown there, but sometimes the classifications are interesting. So team, so we can see like this one came out and then it was underwater for a while. Funny, it took more than a year for it to really set up. So here's the setup right here. If you missed that setup, you got a second setup there. And then here it just takes off to the races right there. So volume is also something else you want to really pay attention to. So, O'Neill was right on the money when he said it's all just price and volume, right? So even if you did nothing else, there's a way you could pick up some of these stocks by studying volume as well. But here's the breakout and to the top, and that's over 1,000%. That's a 10 bagger right there, right? and then since then it's been selling off. Now it's trend. We have a trend reversal on Teams. We had a good week this week. Looks like there's a little bit of a breakout bar. Still negative income, but their cash flow is more than, so they're generating a lot of cash that they can cover their income losses there. So they're probably growing still. For the quarter, so they're on a path to positivity because the last quarter is positive. But
It's
the
just
numbers are,
noticing the institutional ownership is like at 50%. So
yeah.
from that IPO, it's, probably went up to that, or maybe it was higher and it's dropped down since they've been selling it off.
So
But
they've
it
got a
still
little
has a high
debt as well.
institutional
Yeah.
support,
So something like this would need to be studied because you have to take a look at you have to take a look at so a stock like this needs to be studied because you have to take a look at, right, what is going on. What So they have debt. What is that debt for? What was it used for? Was it used to for good stuff, for their growth? Was it used to um buy um pay for their shares or whatever? There's a
yeah.
lot of things debt can be used for.
Mhm.
There's for share buybacks or etc. and all that kind of stuff, right? So yeah, and you should, and these are things you should know because jumping in to stock, because the tendency is that for traders specifically, even though the golden rule in Cairn Slim is like 7 to 8% from your purchase price, or 7% from your purchase price, 8% from pivot price. Um, you know, people, if you jump in and you're facing a loss, the immediate reaction isn't to sell it because emotions take over, and the immediate reaction is to say, "Oh, it'll come back." Right. So if you jumped in to say, I don't know, here on this breakout to all-time highs, and then you said, "Oh, it's going to come back," come back. It didn't come back, and then it started to come. Oh, it's coming back. You know, then it started to come back. But you're in a hole now of 70 to 75% down, and then you probably threw in the towel somewhere between here and here. But now, after all of that commotion, stock is starting to come back, but you're still off 50% at this stage, and you've been sitting in the stock for almost 2 years now, right? So that's not how you move your portfolio and your equity curve. So there's a whole thing around how to do that, and things you should pay attention to if you want to. It's not just being about profitable. It's about maximizing the opportunities that are put in front of you. Okay. All right.
I have one question before we go, if I can. You've got a lot of I guess, indicators and stuff on your chart since the last time I've been in the group, but do you have a video somewhere along the way where you explain more of what you've all the bells and whistles on your charts?
I don't. So I try and keep it fairly simple. I'm not sure which one you saw last time, but most of the time, like on Sunday Night Stock Review, and most of the videos is you have this one, and then sometimes I just use a clean chart. But yeah, this is the S&P up here, relative strength line. And that's just your price with two moving averages on it. And this is volume out price, and then down here is just price with an average volume. And then I've got up here, I've just got like something that helps me with accumulation. Was the accumulation that week or distribution, so I can study the basis a bit better. See what was in a base this week. Because it's not just it's okay, so here's a good one, right? So here we have an uptrend, and you see the stocks in a base. 40-week is up, 10-week is come in, but it looks like it's about to turn. But then you study, okay, yeah, what's the quality of the base? So you have to, on the technicals, right, start over here, first week down, and then we get a distribution week here, somewhere to -1. Then we get accumulation weeks 1, 2, 3, 4. So we have a net accumulation distribution count of +3, which means there is buying going on within the space. So that's a good sign because people are stepping in, and then as this stock breaks out, then you've got a good floor, a good foundation on which the stock will spring up when demand starts to come through and it clears the recent highs. So pretty much, so that's pretty much it. I don't pay a lot of attention to. I mean, I do keep. The only reason I have these averages, I don't really pay attention to the averages, is because some of the people here kind of cancel them when they use the 50-day and the 200-day, and those two are fairly popular. But I do have the relative strength line. I use this more than the averages. Then I pay attention to the volume a lot. And then the other thing I have, this is just the market. So I can see what the market's doing at any particular time. So this pullback here, for example, if I was just looking at the price, I would be, oh my God, what's going on? Well, you can see it's within the context of a market pullback. And then the market takes off. Yeah. So this one is starting to rise, but not as quickly as the market. So it's not one of the strongest stocks out there, even though, and we can see when the volume isn't super strong. So there's probably other opportunities that might be better than Fastly, even though it's got a nice looking base that's forming. So yes, it has a base, which is good. Doesn't really pass the numbers over here, just no good. Doesn't pass the relative strength, which is good. And then relative to the market, it's not as strong as some of the others. That one is this, just a quick look. So, see if we can find a. Okay, just in terms of chart, because I know the financials are rubbish, right, on this one. But so here we have stock that's coming down, starts to kind of, we got a little trend change, and we can see that you got 1, 2, 3, 4 solid up weeks here. Doesn't undercut the lows here. You got a little base here, a little breakout here, and then which doesn't hold, so that failed straight off the bat. And then it goes on to make this base, and then within the space we can see that's some of that's within the market context. So here the market's coming down, and stock initially starts to come down, but you can see as it forms the bottom of that base, you have a divergence. Market's still coming down, but now this stock is not going down, and we start to see the relative strength holding and improving. And then stock as the market starts to, well, the market bombs here and comes off the lows to make this move, this stock then goes with it, right? So this would have been picked up as part of us having strong relative strength during that period. In fact, you go 1, 2, 3, 4, 5, 6, 7 straight weeks, straight up weeks. So that's pretty strong accumulation. In fact, 5 weeks, which is 1, 2, 3, 4, 5. At the end of this week, which this also happens to be a breakout week, you could have added to your position. So you could have gotten the breakout and then added straight away. So there's a lot that goes into this. It's active trading, and but there are spectrums to techniques and skills and how much time you spend and insights and wisdom and all that stuff. But it's also very rewarding because you build a skill that's going to be with you forever. Okay, so I think we've been going we've gone well past the hour, so I was just planning for 1 hour. So let's close out. So thanks for coming. Was this useful? Any just quick feedback?
Yes, I'll have to review. Oh, this will be posted on YouTube?
Yeah, I'm going to post this here on the YouTube. Everybody have access to the YouTube. So you just go to YouTube, type in SNSR, which stands for Sunday Night Stock Review space 360 space investor, and that'll take you to the YouTube channel. Okay, with that being said, everybody have a great rest of the weekend. Have a happy holidays, happy New Year, and some of you I will see tomorrow night, and the rest I'll see you in the new year.
Good.
Goodbye.